Hey everybody, welcome back to We Talk Money. We are back in the studio today and got a lot to talk about. Before we dive in, just some quick intros. For those of you that don't know me, I'm Chris Dunn. I'm your host. I'm here with Nikki, certified financial planner, and Travis, professional stock investor. And let's just go ahead and dive right into it. A lot to talk about this week. We've got a ton of earnings in the stock market kicking off. We've also got the Bitcoin halving, which is 2 weeks away. And yeah, lots of new reports with states opening and coronavirus numbers starting to look a little bit better. So yeah. What do you guys make of it?
Well, I think some people think that reopenings of states are happening too soon. And a lot of people are concerned about the virus having a second wave, essentially, sooner than we thought.
Yep.
So obviously that's concerning, but it appears that, states like Texas, they're reopening at a 25% capacity. So it's not like we're going full-fledged into this. We're kind of easing our way into it. And, we kind of have to start at some point, right? So at least the state is being mindful of that, and they are putting some limitations on it to try to contain what we could see further in the spread.
Yeah, I know we've got here in Austin companies like the Alamo Drafthouse, which is a big movie theater. They were saying they're not going to be reopening theaters this weekend because it's a complex project that involves a lot of procedures and equipment. So even companies that are allowed to open are maybe not even going to. I don't know. Do you guys see most restaurants just going back to normal or?
No. Yeah, and we have seen some comments too from some restaurant chains saying that they don't really want to open for 25% capacity, that it's not worth it to them at this point. I think others, perhaps some of the smaller local restaurants that have been hurting a little more, they may be more open to that. But yeah, I think we should all be a little bit cautiously optimistic. The one thing that I think is going to be helpful is that a lot of people now are wearing masks. There are mask requirements. There is a lot more sanitation happening. There's a lot of procedures are being put in place to really help to minimize some of this risk out there. And like you said, we've got to be able to open at some point. I mean, how long were we going to sit with the economy closed, right?
Yeah.
That's creating a lot of pain in its own right. So I think it's time. We need to start the phased reopening. And I think this is a good first step. Certain states are going to approach it more aggressively than others. But I also think that, if you're a certain state or municipality and your caseload is very, very low, then sure, why not be a little bit more liberal with how you're opening things up?
Yeah.
Yeah.
So let's take a look. So looking at daily cases worldwide, and again, this is incomplete data. It's not perfect, but for the most part, you can see for basically the month of April, it somewhat has flattened out. If we look specifically at the U.S., you can see as of the past couple of days, looks like it might be starting to come down a little bit, which is a good sign. But we've also got kind of a weird thing, Nikki, I know you wanted to talk about, which is how Paycheck protection is causing some really weird conflicts. What are you seeing out there talking to entrepreneurs in the community and just in general?
Yeah, it's an interesting conundrum that we've come to with the stimulus that we saw, unemployment. Basically, they beefed up, or Congress beefed up unemployment benefits to be pretty decent for most middle-class families and lower-income individuals. And I think the average hourly rate that they could get on unemployment is $20 an hour, if I'm recalling that correctly, up to. It depends on the state. Every state's different. But basically what's happening is these small business owners, they got the Paycheck protection because, they thought they were doing the right thing. They want to get people back on payroll. They want to help the economy and make sure everybody can survive. But what's happening is people don't want to come back to work. So these small businesses that took out these loans, they thought they were going to get a grant, right, by keeping their payroll at a certain level. Well, they can't get their employees back. So now they may not be able to get the grant that they expected or the loan forgiveness that they expected if they can't get these employees back.
So why aren't the employees coming back?
The employees aren't coming back because they're happy on unemployment. They're making, in a lot of cases, and I wish I would have grabbed this graphic for you, but there's a graphic going around that is showing that over 50% of states, people are making close to 100% of their salary or more.
Wow.
So some people are making 120% and higher of their salary. It depends on the state. So people are like, hey, leave me alone. Leave me on unemployment. I'm going to ride this wave as long as I can. And the employers are kind of stuck not knowing what to do specifically and how to get them back legally.
That does create a weird scenario.
Yeah, without pissing off the employees.
Yeah. So what are the options? I mean, it almost sounds like that's not even legal for if you're getting unemployment and your employer saying come back to work. How can they just stay not working?
So technically, they're not eligible for unemployment in most states if they get a request to come back to work or a request for employment. Mm-hmm. So technically, they're not supposed to continue collecting unemployment. What I've been suggesting to some business owners is, one, you can try to offer some type of hazard pay or some type of bonus. As long as it's a reasonable bonus, then it should qualify for payroll and for the sake of the payroll protection forgiveness. Mm-hmm. So I've been kind of mentioning that. Also, talk to your employees. Let them know that this unemployment benefit is not going to last forever. And they want to make sure that they have a job to come back to. And they may not if they don't come back, because these employers, they need people to come back, especially if we're going to start, turning back on the economy again, right? So I've been suggesting just talking to them, having a frank conversation, letting them know, hey, look long term here. Do you want to keep your job? And also, you can report these employees to the unemployment office and contest the unemployment.
Yikes.
So hopefully that's like the worst case scenario.
I think the right approach here is, like you said, like for the business to point out, listen, unemployment benefits only last so long, and then after that, you're going to be in a real tight spot, and this job may not be around for you when that day comes. So think a little bit longer term. Like, yes, you may be making more this month or next month, but think about like what it's going to be like in December, where you
when you have no income.
Yeah.
Yeah.
Interesting. Well, that's really helpful to hear. I know you're talking to a lot of entrepreneurs and people that are in that scenario. So, thanks for giving that a little bit of color.
Yeah, sure.
Cool. So let's move on. So we've talked a little bit about the opening. We've looked at some numbers. Let's talk about the Bitcoin halving. We've got, I believe, about 14 days until the block rewards for Bitcoin get cut in half. So for anybody that doesn't know, what that means is every 4 years, the new supply of Bitcoin gets cut in half, right? So in about 2 weeks, that number is going to get sliced. And so that is inherently bullish for price. Now, obviously, the demand side has to be there. So it's not a guarantee that with each halving, price just has to go up, but it is inherently deflationary because you're having the new supply gets lower and lower over time, where as we've seen with like the dollar and most fiat currencies, those supplies have just been going through the roof. So right now it feels like, that Spider-Man meme where it's like everybody like, you're Spider-Man, I'm Spider-Man, who are you, right? Yeah. It's like, I feel like a lot of Bitcoin investors and traders are kind of sitting on the sidelines just going, okay, what's going to happen, right? Because this key level, $8,000, has been a massive, what I call a magnet for price, really for the past year. You can see a couple of times we've gotten above it. We've made runs as high as 13 or 14K. We've made a dip as low as 4K, but 8K really seems to be the magnet. And you can see right now coming into the halving, we've got both moving averages, the 100 and the 200 period moving average, and we're now using 8K as resistance. So by the time this video and podcast hits, we might make a big move by then, but it looks like we're actually squeezing into this resistance, and the tighter this price action gets, the bigger the move is going to be when we actually release outside of this area. So I'm bullish, I'm long. In the community, we were buying the dip and buying on the way up in anticipation of the halving, but it's also at a really kind of risky area because there is kind of this spiral where if we don't get a breakout, if we don't see some bullishness prior to the halving, a lot of people could have that kind of exit effect where they all try to dump at the same time, and that could cause another washout. So just something to keep in mind there.
Yeah, I think it's a really interesting time for Bitcoin, like you said, because of the halving and things like that, but also because of what's happening in other markets like stocks and gold. And, you look at Bitcoin versus gold over the last couple of weeks, and I expected Bitcoin to actually perform a little bit stronger than it has in the last, call it, month or two, given all of the stimulus we've seen in the economies and the worries about future inflation and the fiat supply. So I've been actually a little bit surprised that Bitcoin hasn't been stronger. And I think it could be setting up for that potential strong run like you're talking about, especially if you start to get some of these traders that have been kind of in the equity markets and the stock markets trying to, hunt for quick flips. It's been a pretty hot market over the last couple of weeks, but I think we're at a level that I'm pretty neutral on the stock market overall. And so I think you could get some bleed back into the crypto markets from some of these speculators if Bitcoin starts moving and stocks kind of flatten or stay in a choppy range.
Good point. Yeah. And I agree. I mean, since the beginning of the year, gold has definitely been looking very, very strong. Obviously we had this kind of weird scenario through March where there were a lot of liquidations on futures, but for the most part, this inverse head and shoulders or cup and handle has kind of been holding up, and we've been flirting with as high as 1800. So, the capital flow right now is very strange because there's a lot of fear in the stock market. And this is why over the past couple of weeks, I've said this is really Bitcoin's time to shine. Like if Bitcoin can't do well under these conditions, what conditions will it thrive under, right? Yep. With the halving, with stock market fears, with the Fed printing a ton of money, like it really is the perfect storm for Bitcoin to show what it can do.
Yeah.
I've also been seeing some comments about how Bitcoin is kind of starting to make the turn as it's not having as much volatility. Mm-hmm. And so people are kind of looking at it a little closer saying, maybe Bitcoin's finally calming down to a point where it can be a store of value that isn't so risky.
Yeah.
That's what I've been reading. I don't know. Bitcoin guy, tell me. What's the deal?
I mean, the fact that we have a magnet is nice, right? The fact that 8K has been holding basically, if we kind of zoom out and just look at a weekly chart, you can see really what's happening is this big consolidation pattern. So yeah, I mean, 2017, we had a massive speculative bubble followed by the crash, followed by the rebound. And now we're really just mid-range. And so I feel like this halving is the most important moment over the past few years in Bitcoin's price. And, there's a lot of models that we can use to value this. And a lot of people like to look at a logarithmic chart, which basically helps you see like exponential growth in a more clean way. So technically Bitcoin is actually undervalued based on a lot of like the stock to flow models and different ways that you can just value it fundamentally. But yeah, I don't know. I just feel like we're at a very, very key moment in time, and now is Bitcoin's time to shine.
So let me ask you, if the halving comes and goes and Bitcoin is still in this tight range or doesn't really make a move in either direction significantly, how do you think about that? Like, do you think that gives you any kind of signal, bullish, bearish? Does it mean anything?
I think the longer that Bitcoin hangs out above 3,000 or 4,000, the more bullish that is, right? Like every time the market panics, like back here when Bitcoin crashed with basically all asset classes back here in mid-March when the coronavirus was really heating up, it fell by 50%. And anytime Bitcoin falls by 50%, over the course of 1 to 3 days, I'm a buyer, right? I've been doing that strategy since 2013, and it's worked very, very well. With that said, what we've seen over the past few years is every time we've gotten panics, and for the most part, the yearly lows have been setting higher and higher prices. So I don't know, like if Bitcoin, let's say the halving comes and it's kind of a non-event, then that's actually okay too. Yeah. There could be some weird stuff that happens with miners. Like if mining becomes unprofitable, that's going to change that landscape. And I'm by no means an expert in mining, but that will definitely shake things up and some players will not be able to perform. But there's levers that are pulled, right? Like if the hashing power goes down, there's certain levers where it becomes easier to mine or more profitable in certain scenarios. So I don't know. I'm kind of in a reactionary moment right now. I'm not trying to anticipate what's going to happen. I'm just setting up my plan where I'm going to respond both to if either the bull or the bear scenario plays out.
Mm-hmm. Same thing with stocks. Like literally what you just said is what I'm doing with stocks in the stock market, just kind of letting the price dictate reactionary, so to speak.
Well, why don't we jump over and talk about the stock market? Because right now we are at another key level, just like Bitcoin is, basically a 61% pullback in a lot of the stock market indices. What are you guys seeing? What are you doing? What are you thinking?
I mean, from a technical perspective, yeah, we're definitely at an important inflection zone. But there's also the fundamental side of this that it's just so hard to pin down how the market is still up this much. I think if you use the estimates, I think the estimates were putting us at like a 20 times PE ratio in the S&P 500, which, and correct me if I'm wrong or if you have a different data point on that, but that's still pretty high considering the environment that we're in.
Yeah.
But with that said, you know, we're not out of the gate yet. We could still see the market pull back and see that correction that everybody's waiting for. But if earnings continue to surprise and the numbers aren't as negative as people were expecting, that could fuel this. That could keep the market up, in my opinion.
Yeah. I mean, and there's one kind of weird thing that we have to keep in mind, which is there's a half dozen companies that have the lion's share of the market cap right now, and those companies seem to be doing very well. So I don't know. What do you guys make of that?
Yeah, I wrote about that in my newsletter about 2 weeks ago. I think we mentioned it here briefly on the show as well. But yeah, the FANG stocks basically make up 20% of the S&P 500. So, you know, basically 4 or 5 stocks make up 20% of the value of the 500 stock index because it's a market cap weighted index.
Yeah.
So it is a big driver of the S&P 500, but it's also a massive driver of like the NASDAQ 100 because that's a smaller basket of stocks. And so it's an even larger portion of that index. And like you said, a lot of those companies are still seeing many of their business divisions performing well during this environment because they benefit from either gaming or cloud or, you know, work from home trends, things like that. So that is a reason why this market has probably rallied faster and harder than a lot of people anticipated. You know, we were looking at the chart of, say, the Russell 2000, I think last week versus the NASDAQ and the S&P, and the Russell 2000 has lagged. It's still down, I believe, about 19 or 20% year to date.
Yeah.
And the NASDAQ is actually up year to date or about flat year to date, maybe after today. But you've also got things like the European indices and the Asian indices, which are still down about 20% year to date. So really, the S&P 500 and especially the NASDAQ 100 are kind of an anomaly.
Yeah.
So that is throwing a lot of people off who think like the stock market is being irrational. It's not really when you look underneath the surface.
So basically what you're saying is here on the Russell, this makes up a lot of smaller cap stocks, and that's why it's underperforming the NASDAQ 100 or the S&P, which are weighted more towards the big FANG stocks.
That's right. Yeah. So that's one big driver of what's been happening. The other thing to remember too is that the stock market is always forward looking. So it tends to anticipate the things like economic recovery, and it will be up ahead of the actual economic numbers like we've talked about over and over. So the stock market does not move in lockstep with the economy. People have to understand that. Stocks in general, by the way, like if you were just looking at an individual stock, it doesn't track with the company's earnings one for one either. It will look forward. You know, a lot of stocks are already looking past the 2020 numbers because everybody knows the sales and earnings are going to be down.
Yeah.
But as long as that company survives, the majority of the value of the company is actually based on the cash flows and earnings that the company will earn for the next 5, 10, 15 years out. So 1 year of bad earnings doesn't kill the value of the stock. So that's important to keep in mind. Now, we do see some stocks that have a high risk of not making it through the crisis, or actually what I've seen more in recent days is companies that have had to raise capital at low share prices, which means big dilution for the existing shareholders. And that kind of caps the eventual upside or caps the ability for some of those stocks to get back to prior levels. So that will affect the potential upside on a lot of companies.
Do you have any examples or any recent moves you made?
Yeah, so an example of stocks that have been raising capital include like Expedia raised a significant amount of capital last week with both debt and equity. Had companies, Snapchat raised a convertible debt after it popped after earnings, which kind of puts a ceiling on that. And then you've got
American Eagle.
American Eagle had a pretty bad dilutive convertible. It was like a 20 or 30% dilution of the existing shares. And then today we saw Southwest Airlines report their earnings and put out a press release about raising more capital, including equity and
it's bouncing.
And it's bouncing today.
It's bouncing a little bit.
Trading massive volume.
What the heck?
Yep. So that's an interesting one. We could talk deeper about what's going on there, but obviously the airline sector is an area that a lot of people are looking at right now for potential recovery down the road.
Yeah, so Love is pretty beat from the all-time highs around 66, down about 60%, 55, 60%. Yeah, what do you guys make of airlines? I know this is a big point of contention for a lot of people with the bailouts and, you know, just trying to figure out what this looks like a year, 2 or 3 from now.
Yeah, so with Love specifically, they're a great example. So Love actually has the best balance sheet of all the U.S. airlines. They actually came into the crisis with, I think, either slight net cash or I think slight net debt, but very, very low levels of net debt. And of course, they're going to have to, because they're literally at, I think they said 5% load factors on their flights right now, meaning 5% capacity. They still have high fixed costs, so they're burning cash. So they're going to have to add capital to the balance sheet. They added some debt, and then of course they have the money from the government, which is a low interest loan as well as a grant, as long as they keep a lot of their employees on. So that helps plug the gap a little bit, but they are going to have to add debt. And they decided today that they were going to raise some equity capital as well, which I was kind of surprised by, because they have like 8 or 9 billion of liquidity, which should at least last them through the middle, or at least through the end of the year, if not much flying was even happening. But I think we'll start seeing the recovering of flying pretty soon. So I was kind of surprised that Southwest decided to raise equity capital and dilute shareholders a little bit. But that being said, they are conservative with their balance sheet, so that may be why they did that.
Yeah.
When I was looking at the earnings of Southwest, they were expected before the crisis to be earning about $4.50 to $5 a share. Now, I think going forward, the incremental capital that they're raising, as well as the probably lower load factors they're going to see when people return to flying, means that they're probably looking more at like a $3 per share earnings result in the next, call it 2 to 3 years, as things return back to normal. So if you put a multiple on that, it probably means the stock has upside to like the 40s area, which isn't going to be, again, as high as where it was trading prior to Corona. So it's got upside from here. It's just not perhaps to the level at which it was at before.
Gotcha. So airlines, very interesting area. The other kind of big space that, Nick, I think you've been looking at is cruise lines.
Yeah.
What is going to happen with cruises? What are you seeing over there?
I have no idea what's going to happen with cruises, but what I'm seeing in terms of what we've heard so far from, I think it was Royal Caribbean that put out data, that they're actually seeing demand for 2021 cruises, which is wild.
Yeah.
To me.
So people are just pre-booking?
Yeah, they're putting out sales, they're putting out deals, they have flexible cancellation policies that they have in place. They're trying to entice people to buy cruises in advance, and apparently it's working to a degree.
Yeah.
Obviously, these are highly levered companies. They are really getting beat. They're not getting the bailouts that, the airlines are getting. They had to raise debt they had to basically issue debt at high interest rates.
Yeah.
So it's not all roses and dandelions for these companies.
Yeah.
But I consider the cruise lines to be like a high risk, high reward type play here, because I know a lot of people are interested in them. And if you think that people will continue to cruise in the future, there could be some upside to these cruise lines. And also from a technical analysis basis, like just looking at the charts alone,
Yeah.
they kind of have some nice setups going into, basically the next phase of what we're looking at with the reopenings. So it could get interesting for cruise lines.
Yeah. I mean, the charts were down. Well, at least Royal Caribbean was down 85% off of the highs. What is there any data about like what the market sentiment is? Like, are people willing to cruise? Have you seen anything like that?
So I did see, and this might be biased because it was like Cruise Enthusiast magazine or whatever the big cruise magazine is, I forgot, but they did a survey.
Definitely biased. Yeah.
Yeah. But it was like 66% of people will cruise again, and like 10% of people can't wait to get, like 10% can't wait to get on another cruise.
Gotcha.
So I don't know. I feel like from what I'm hearing, people that love to cruise,
Right.
And they're gonna do it again. It may take some time. Like, I don't expect these companies to get back to revenue quickly, or at least what they were doing before, but if they ease into it and they can make some type of revenue, then maybe they can cover their debt expense and they'll survive it if they can, raise enough capital or issue debt or whatever they need to do to get through it.
Yeah.
Yeah, I think this one's similar to Southwest, is one where we were looking at their earnings power before the crisis and their earnings power coming out of it, assuming they survive. It looks like their earnings power will definitely be lower, but that being said, I think they have the potential to earn, what was it like? I think $4 or $5 a share. And if you slap a reasonable multiple on that, you could be looking at like, say, a $60, $65 stock. in the near term. I don't know longer term what that might look like in terms of earnings power, but they are going to have more interest expense and probably more expenses from like sanitizing and having
for sure
protocols like that.
And
less
just lower
revenue,
demand.
Lower demand. But you're right. There was that LA Times article that mentioned too. There was a bunch of data that they showed indicating that people were still booking out into 2021 for cruises, which is pretty amazing.
Yeah. I don't know. Personally, I'm staying the hell away. I mean, I know they're germ factories and I don't like really cruising anyway, but I mean, there is a demographic that really loves to cruise. And
for sure.
If they're putting out these crazy, maybe even like free deals, right? Where it's like, hey, just pay the taxes and come on and drink a bunch of booze and gamble.
You can get a 5-day cruise to the Caribbean for like $299 right now.
Wow.
5 days.
People will roll the dice on that for sure.
Yeah, and especially people that are kind of coming out ahead with maybe they're making more on unemployment. They got a stimulus check on top of it. Like they might be like, "Hey, this has been hell. We're gonna buy a cheap cruise and we're going on a vacation next year.
I'm taking this government money and bouncing."
Yeah, we'll see. I have no idea.
Yeah. The one thing that is hard to know, there's two things, I guess. One, there are these anecdotal reports that people are booking out until 2021, but we don't know if that's going to be like 50% of the ship's capacity or 80% or 20%. You know, there's obviously some people that are doing it, but we don't know the exact numbers yet. So you got to be a little careful about, following some of those articles into the stocks. But
For sure.
Second thing is, I don't know, are there going to be potential legal liabilities from what happened with the ships that had to be, docked or
good question.
Yeah, sitting out there for 2 weeks because of the, coronavirus. So
I don't know. For me, I'm going to put that in the too hard category. I don't know. What do you guys think? Is it worth playing?
I mean, it's a high risk, high reward play, in my opinion.
So if you trade it, keep tight risk on it.
Yeah.
Yeah.
Exactly.
I think it depends on the style of investor you are.
True.
Like if you're more of a, keep tight stops and more of a quick trader type of investor, then I think this could certainly be an interesting setup, like you said, both technically, fundamentally. For me, I'm a little bit longer term. My upside targets, my risk reward is a little bit different profile than this, so this one's not for me. But
cool. Well, so keeping that momentum rolling on the stock market, we've got a ton of earnings coming out this week. What do you guys think are the bellwethers, or just something that people should be paying attention to or really thinking about?
Well, Boeing's going to be a big one. So obviously, sticking with the airline sector, Boeing had issues with their 737 MAX planes even before coronavirus. And then throw on top of that, they've got all these orders that may be canceled from other airlines that no longer need as many planes. And then you've got just a host of liabilities that are piling up on the balance sheet. So Boeing could be pretty ugly. It's also a member of the Dow, so it can have a big effect on some of the market indices. And so I'm interested to see what they say and what's going on there. So that'll be a big one. Obviously, the big tech stocks everyone's going to be watching. Facebook,
Apple,
Tesla, Microsoft. Those names are reporting this week. Apple, like you said, that's
Did
a
Google
big one.
already report? It's 2 p.m. East or 2 p.m. Central.
I think it reports after the market
after
today,
hours today.
believe,
Okay,
if I'm correct on that.
Anyway,
yeah, and you've got a lot.
That'll be a very interesting one actually to see. What they say about ad revenue coming in going into April, basically.
Yeah.
That's really what we're all interested in, is to hear what's going on in April. What are you seeing?
Yeah.
Because we know that the first part of quarter one was fine for the most part.
Yeah.
It's what did they see going into quarter two that we care about?
Right.
Yep.
So tomorrow's Wednesday. We've got Boeing, Facebook, GE, MasterCard, Microsoft, Qualcomm. Then later in the week, Amazon, Comcast, McDonald's. Yeah, just a lot of really big stuff.
Exxon will be interesting too on Friday. So obviously the energy sector in turmoil right now. Exxon has long been a kind of a blue chip in the energy sector, but even its stock hasn't been immune from what's been going on. So I'll be interested to see what they say and what they think the energy market's going to look like going forward. That's another one I'll be watching.
Jump into energy too. I know last week, Trav, you gave basically a short masterclass on how oil futures worked after everybody got their world rocked and saw something unprecedented with oil futures actually trading at negative prices.
Yep.
So looking out into the June and the July contracts, which I know a lot of eyeballs are on, you've got still some contango. You got, June trading around like $12, July at 17 or 18. Have you had any changes of opinion or thoughts in this market?
Nope, no changes or thoughts. Yeah, the Crude futures markets are still looking weak across the board, and then of course the front month contracts still seeing excess pressure. I warned people about the USO ETF, which invests in crude futures. Smartly, USO actually pushed out some of its contracts from the June and July futures to some of the later month futures. The problem is that cost them more money, and so they had to buy higher price futures later out. But it did, remove the risk that they're going to get smoked by something happening in the near term contract. But nonetheless, as you see, this is why I warned about USO. It's still down. It's down even further than it was last week. So, I would just warn individual investors to not think that they can just come into this crude futures market and make a bunch of money, because it's not simple. And your counterparties here are energy desks and hedge funds and large players who know what they're doing and know this market. So.
Yeah, that's one thing I always like to think about whenever I'm trading or looking at a market is I ask, like, what is the competitive landscape, right? Like, who's on the other side of your trade? And that's why, like, around 2012, 2013, I really started looking at Bitcoin, because I was like, man, the futures markets on a day trading basis, they keep getting harder and harder and harder. They're more competitive, more algorithms, more professionals, less volatility, right? So it's like it's almost like you're trading in a harder landscape with less reward. And then with Bitcoin, it was like, dude, there's no pros in here and it's volatile as hell. That's like a trader's dream, right? And so like when you look at some weird stuff like oil, I think like newer investors or traders could look at that and go, wow, it's super volatile. It's crazy. You can go in and, play options or futures with high leverage and make a ton of money. Well, yeah, right. Like the 1 out of 1,000 on Wall Street bets you see post these crazy charts will make money, but almost everybody else is going to lose everything, right? Yeah. So, yeah, I'm with you on that. I mean, you've got to think about who's on the opposite side of my trade, and the shorter your time frame, the more risky that is, right? Yeah. Like the longer time horizon you have, the less risky in some way. But if you're swinging on futures that are expiring, you could end up holding something that you have to pay somebody to take from you.
Yeah, it's crazy. The other thing I noticed too that a lot of traders seem to be doing over the last few days, especially last Thursday and Friday, they were piling into a lot of the really beaten up energy stocks that are on the verge or actually already in bankruptcy, which is crazy because, again, most of those will be worth zeros. If we look at the crude futures right now, even going out into 2021, most of them are still trading under $30 a barrel. Most energy companies can't make money at under $30 a barrel. So there's a real question about survivability and liquidity for most energy companies. And the ones with the worst balance sheets are almost certainly going to have to go through a restructuring, and the equity could get wiped out. Nonetheless, some of the short-term traders are out there whipping these things around. We saw like Whiting Petroleum on Thursday, I think more than doubled, ticker symbol WLL. That company's actually in restructuring right now, and the current equity holders are going to get about 3% of the restructured company. But looking at the value of what that could be worth, I value that at about 30 cents a share on the current equity. And that didn't stop the stock from going to like, I think $1.50, $2 a share on Thursday. And then of course it sold off on Friday back down. I think this stock will probably end up trading back under $1. So you just have to be really careful. I think some people were probably buying this thinking they were getting a deal at under $1. And they think this thing could go back to like $5 or $10 a share. But what they don't understand is this company's in a restructuring. Fundamentally, this equity will not exist in a few months. It'll be a reorganized company, and you're going to have a much, much smaller piece. So you got to kind of understand what's happening here if you're going to hold this more than like a day.
Yeah, and we've seen on like smaller cap stocks, especially penny stocks and stuff that trades on the pink sheets and whatnot, like momentum can drive these things to crazy prices. But like that's why even if you're a technical trader, like it makes sense, like you said, to know the story behind it, because you might buy a breakout at like 50 cents and then be up at $2 thinking you're a genius, and then you wake up the next day and it's worth zero, right? So it makes sense to, even if you're not a long-term fundamental person, to just know what the hell is happening with whatever market you're trading.
Absolutely.
Yeah. Cool. Well, you guys want to get into some Q&A?
Let's do it.
All right. So first question, Nikki, I guess we'll kick this one to you if you want to go ahead and put your CFP hat on. Panda asks, for capital gains on stocks I sell, should I be setting aside a percentage of the profits for taxes before reinvesting, if that's even an option?
Yeah, so if you have no other cash to pay capital gains tax from, no other cash buckets available, then obviously that's a good idea. You want to make sure that you can cover that tax. But the downside of that is obviously if you're trying to reinvest and you're trying to compound, you're not going to have that capital to reinvest. Keep in mind that at the end of the year, you can net your losses against your gains, your capital losses against your gains. And so, you may put this money aside, but if you're still investing and you're still trading, at the end of the year, you may have a completely different number, and either you don't need that cash anymore or you do. So it can kind of depend a lot on your trading style. But for the overall general idea, if you don't have any other cash to pay any capital gains tax from and you have a nice gain, then yes, it's a good idea to set some money aside for that so that you're not stuck at the end of the year.
Cool. So next question is, Samuel says, what are some retirement tools an entrepreneur or self-employed person can use that will not be taxed upon withdrawal besides the Roth IRA? What would you recommend that someone that has a 401k plan over 50 years old can do in the times we're in? So I guess those are two separate kind of questions, but for somebody who's self-employed, what are you thinking there?
So the IRS does not love the idea of people being able to take out money in retirement tax-free. This is why they cap our ability to contribute to a Roth. There aren't many other instruments that allow us to kind of have that Roth effect. There's something that you can do that's kind of a higher level strategy in terms of life insurance. You can actually take out a life insurance policy, a specific type of policy that you can in your retirement pull loans from and live off of the loans. And then what happens is when you pass, that life insurance money goes to your heirs tax-free. So it kind of works in a Roth-like way because you're pulling withdrawals by loans, and then once that money passes, you are actually that heir is getting that money tax free. So the withdrawals aren't taxable income, or the loans aren't taxable income. So that's why it kind of has that Roth-like ability. But it's an advanced strategy. You definitely want to talk to like a licensed insurance professional about that strategy, and a financial planner too, or someone that works with that, because it's definitely not something that you want to just try on a whim.
Yeah, I know that's kind of a specialty of yours, is working with people that have wealth to figure out ways to basically optimize and minimize taxes.
Yeah, and the life insurance strategy is one way that's Roth-like, but not many accounts like the Roth out there for us.
Yeah. Nice. Okay, and then the second part of this question, which this is kind of a loaded question, what do you recommend that somebody who's over the age of 50 and has like a retirement plan, what should they do in these times we're in? You know, I'm sure there's a lot of people that are closer to retirement that are trying to figure out like, okay, what if my account gets cut in half over the next couple of years? What do you guys think?
I mean, I think that this is where good planning from the start helps, because if you were properly invested for your risk tolerance, then at the age of 50, your allocation should have been adjusting to anticipate you needing this money and needing to conserve this money for retirement. So hopefully that's been happening. I would suggest maybe taking a look at your 401k allocation. What percentage of stocks are you in versus bonds? You may find that you're in an allocation that kind of helps you weather these types of environments. At least that's what it should be. If not, then this is a good time to take a look and adjust that. If you are, worried about a big decline in your 401k, then you definitely need to make sure that you set your allocation that fits your risk tolerance.
Yeah.
Travis, you may have something to add.
Well, yeah, I think it's nice that we're not at the market lows and you're looking at this question, right? Because the market has bounced nicely. It's not back at all-time highs, at least most indices aren't. And so if you do need to make adjustments, now might be a good time to do that.
Yeah.
Without feeling like you're doing it at the bottom.
Exactly. Yeah.
Yeah. So instead of panic selling at the low, maybe reallocate when things are kind of bouncing and mid-range.
Yep.
Nice. Or you could just like mortgage your house and YOLO go long Tesla calls. Just take everything you own and throw it into Tesla calls.
I have been hearing about some people remortgaging their homes and buying stocks with the money. So
Well, hey, interest rates are low.
There's
Hey,
that.
there you go.
You just got to know what you're doing, I guess.
Yeah. All right. Next question. Luchador. I think that's how you say that. Is now a good time to refi or take a HELOC? Why one over the other? Only own one home. I think we had a question kind of similar to this last week. I'll take a stab at this. Like, I guess the question is, like, for anybody that's looking to refi, like, what's the goal? Like, are you just trying to get a lower interest rate? If so, absolutely. If you're planning on being in your house more than a few years, like, after you do the cost benefit analysis of closing costs, like, it probably makes sense to get a lower rate. If you want to take some cash out, you could either do that with doing a cash out first lien or taking a home equity line. It's really, I don't think I have enough information to answer this like correctly, because it all depends on what your goals are. Do you need cash to pay off other high interest debt? If so, that could make sense.
The HELOC usually has a higher interest rate than the refi.
Yeah. So. Yeah. Because think of a HELOC as just like an open credit card on your house, right? It's like, it's going to be a higher interest rate, but it's an open equity line. So if you say you get a $50K HELOC, but you don't take any money out, you don't have a payment on that until you start drawing on that. But if you do like a cash out refinance of your first mortgage, say you have a $200K loan and then you take $50K cash, you immediately start paying that $50K back on a fixed amortized basis. So it really just depends on what your goals are. If you have like $50K in debt and you're like, yeah, I can take $50K immediately at 3% on a mortgage and pay off a 20% credit card, of course that makes sense. But yeah, I mean, it just really depends on what your goals are.
Yep.
Yeah.
Well said.
Awesome. Well, guys, any final thoughts or points we want to make before we wrap up this week?
I figured we could end the podcast by talking about one thing we missed the most in quarantine or during like this situation we're in.
Okay. I feel like you have an answer.
Shut down.
You're going to steal my answer. I already know it.
Say it on 1, 2, 3. 1, 2, 3.
Jim.
I
knew it.
Nice. Yeah, dude. I don't know about you guys, but it has been hard not getting out and being active. And, we've fortunately been able to get out on a boat a little bit, but with the gyms closed, man, it's creating a weird dynamic.
Yeah.
I'm going nuts. I need to lift iron quick.
Putting some LBs on here in the midsection.
Oh, nice. Yeah. Hey, if you guys are watching this on YouTube, leave a comment. What are you guys missing the most during quarantine? Yeah, I don't know. I'm going to tend to agree with that. Gym, just social life in general. Like, hopefully we can get these numbers crushed and get back to a normal world. Unfortunately, I don't think it's going to happen overnight. I mean, my guess is we're going to see kind of a pendulum swing of people become reckless and we see a spike in cases and then we have to go through another phase of this. Hopefully not as extreme. Not to be a Debbie Downer, but that's kind of my prediction. I don't know. What do you guys think?
I mean, I'm trying to think positive. I think that the hospitals will be able to handle. We're still going to have corona to deal with. We're still going to have people catching it. It's just a matter of, can the hospitals deal with the inflow of cases, and can we somehow just slowly get back to normal life?
Yes, I agree.
It's cool that we're starting to normalize wearing masks and things like that. That should not only help in the near term with coronavirus, but perhaps for other things that get passed around like the flu as well.
I agree.
Yeah. I mean, hopefully the world learned some really valuable lessons from this. And, the stigma got changed really quick. When we were flying in late January, people were looking at us like we were crazy wearing masks. And now it's mandatory in a lot of areas like grocery stores. So
airlines won't fly now without people wearing masks. They just released that information.
So, okay.
Yeah, if you fly, you have to wear a mask.
Awesome.
Yeah, I saw that JetBlue announced that today, right? I'm sure the others are going to follow.
Yeah. For sure.
Good. All right, guys. Well, hopefully everybody's staying safe, stay healthy, and
website
wetalkmoney.com. Go to the website, submit a question, guys, and subscribe to the YouTube channel. Also, get on the email list by asking a question because I mentioned this last week. YouTube is not communicating well with creators. They're shutting down channels that mention anything remotely controversial. So we may wake up one day and not have the YouTube channel anymore. So subscribe to the podcast on iTunes or wherever you get that. Submit a question. And yeah, we'll see you guys next week. Take care.
Take care.